credits are. So we're going to start off with the American Opportunity Credit. So the American Opportunity Credit is a credit of based on up to $4,000 of qualifying education expenses for each student. Okay, so up to $4,000 in education expenses per student, and the credit is pretty generous. It's 100% of your first $2,000 in education expenses. So the example I gave was you had $5,000 in tuition, $6,000 in scholarships. You wanted to maybe treat $3,000 as taxable and $3,000 as not taxable. Then you'll have $2,000 of education expenses. And if you meet the other requirements and qualify for the American Opportunity Credit, that is immediately a $2,000 tax credit. So it's dollar for dollar, the full amount of the first $2,000, and then 25% of the next $2,000. So if you max out your expenses at $4,000, you max out your credit at $2,000 plus a quarter of $2,000, which is $2,500. Of course, the amount of the credit is reduced if your adjusted gross income is too high, and it was 80,000 is where it starts to phase out, and 90,000 where it completes phasing out, and double that if you're married filing jointly. Okay, and this is an odd provision, but for the American Opportunity Credit, 60% of your credit is non-refundable, and 40% of the credit is refundable. Now, tuition is so expensive that most of our clients will just get either all of it or none of it. So if you have a kid in college, you'll probably get the whole $2,500. And 60% of that is $1,500, 40% of that is $1,000. So you get a $1,500 non-refundable credit and a $1,000 refundable credit. Okay, so here's an example. Frank and Ada, they have 3 children, Bob, Jerry, and Martha, and they're all in their first 4 years of college. Their modified adjusted gross income is $65,000, which is below the limit, and their tax on line 16 of Form 1040 is $4,284, and they have no other credits. All of their children are eligible students, and their American Opportunity Credit is going to be, so Bob has $800 in expenses, so it's 100% of $800. It's 100% of up to the first $2,000. Jerry has qualified expenses of $2,400, so 100% of the first $2,000, 25% of the last $400 is another $100, so his American Opportunity Credit is $2,100. And Martha's qualified expenses are $6,000, which is more than the maximum, so she'll get the maximum credit of $2,500. So if we add that up, Bob's expenses $800, Jerry's expenses or credit of $2,100, and Martha's credit of $2,500. That's total American Opportunity Credit of $5,400. 60% of that is $3,240. So because their tax was $4,284, they'll still get the full benefit of that. And then, so $2,160 of the refundable credit. Who qualifies? That I'm going to put that at the top of this list. For the American Opportunity Credit, there are basically 4 requirements. First requirement is that the American Opportunity Credit has not already been claimed for that student for 4 prior tax years. And there used to be something called the HOPE credit. The HOPE credit is the predecessor to the American Opportunity Credit. So you can only claim this on 4 different tax years total. The second requirement is that you must not already have a 4-year degree. So those are slightly different, because a 4-year degree, if you only go part-time, could take you anywhere from 5 to 8 years to complete, but you can still only claim the credit 4 different years. Or if you're advanced, you've taken a lot of advanced placement classes and you're taking a heavy load of credits, you might complete a 4-year degree in 3 years. But once you've completed that degree, you can no longer claim the American Opportunity Credit. So this, I summarize that in my mind as it's just for undergraduates. Because 4 years is typically what you would need to get a bachelor's degree. If you have an associate's degree, that's only a 2-year degree, so you can complete your associates and still take the American Opportunity Credit, as long as it's only 4 different years. The third requirement is that you must be at least a half-time student, and that is however the school defines half-time. So for the University of Alaska system, that would be taking 6 credits. And you only have to be half-time for at least 1 semester. You do have to be in a degree program, in other words, matriculated. You can't just be going, you're allowed to, the university will allow you to pay tuition and just go and show up at classes. But if it's not counting toward a degree, it doesn't count. And the fourth requirement is you must not have been convicted of a federal or state felony for possessing or distributing a controlled substance. So no drug-related felonies. Any other felony is fine. If you're a bank robber or a murderer, you can still get this credit, but as long as you don't do drugs or sell drugs. So we did say that 40% of the American Opportunity Credit is refundable. However, if you are under age 24, you might not get that 40% refundable credit. And that is basically, these rules are about whether someone is actually supporting you, and maybe they should be claiming you as a dependent. If you are under age 18, you don't get this refundable credit. If you are exactly 18 at the end of the year, you don't get this credit unless your earned income was at least half of your support, so you're working and going to school. And if you're 19 to 24, this only counts against you if you are a full-time student, or if your earned income is less than half of your support. So if you're taking 10 credits, they count 12 credits as full-time in the University of Alaska. So if you're taking part-time load 10 credits, then this rule won't count against you. But if you're taking a full 12 credits, you don't get the refundable credit unless you're also working and supporting yourself. This rule also does not apply if you are an orphan or if you're married filing joint. So here's some overview of the benefits.